Is the Sarasota housing market going to continue to see a slowdown throughout the rest of this year? Well, let's take a look and see. Hi, I'm Nick with the Iannitti Group. Just want to come at you with a real quick housing update for Sarasota in the month of April. So, we did have a slowdown beginning of last year, kind of trickled in the beginning of this year, right? And that was directly related to interest rates and affordability. So I put up this little graphic here showing buyer demand as it relates to the rate. And we know that rates have actually been coming down. They've kind of been in the favor of some buyers recently. And that's essentially due to the turbulence that we've had in a lot of financial markets and putting a lot of pressure on rates. So what's that mean for home prices? Well, in the beginning of the year, we had the Dallas Fed saying, home prices could plunge 20%. Moody's said 210 markets are going to have a 15 to 20% reduction, all that stuff. And as I always say on these market updates here, headlines always do more to terrify than they do to clarify. So has that actually happened? Well, no, not really. So when we look at the latest S&P Case-Shiller information here, this is from about a month ago, we look at the national average is up about 3.8%. However, every market is a little bit different. And what you see here is in these Western markets, they're definitely taking a little bit of a hit, not huge, like anything like what was forecasted, right? Although San Francisco and Seattle are down, pretty decent. But remember that these are all heavy tech markets, right? And right now we're seeing a lot of turmoil in the tech industry, lots of layoffs, lots of things that are being shaken up. So I think that has a lot to do with what's going on further out west, right? But when you look at the rest of the country, that's really not the case. Okay, when we look at FHFA numbers here, we're talking about a national rate of appreciation of about 5.3%. This is year over year for January, okay, by region. So you look at the regions basically, and obviously, out west, Pacific region here, it's getting hammered, okay? But the rest of the country really is in, not nearly in dire shape. But I think what's really important to consider is where are we at from the peak, right? From June last year, basically kind of the height of the market. And when you look at Moody's numbers, Freddie Mac and Black Knight numbers, we're talking 2 to 2.6%, nowhere near the 15 to 20% decrease that was forecasted. So definitely keep that in mind, okay? Will we see affordability improve this year? I think we will as rates continue to come down. Realize that we've seen every time rates do come down, we see more and more buyers coming back to the market, which is definitely good news for everybody. When you look at this here, this is from the Atlanta Fed. As we see this curve right here, these numbers decreasing, right? That definitely means that affordability is going in the right direction for the average home buyer, okay? Keep in mind, from a historical level though, our affordability, we are still historically very affordable when it comes to homes. Keep in mind, I know right now that interest rates in the sixes or whatever seem like they're incredibly high from where we were in the past couple of years. But remember when we harken back to the 80s and the 90s with interest rates 9-10%, right now we're still in pretty good shape. Okay, so looking at Sarasota housing market update numbers here, remember these are numbers from March, right, last month. These are basically single family home numbers for the entire county, and they're all median numbers, and these percentages here are year over year, okay? So our sales price year over year, up 8.3%, okay? Our active market time is definitely things are taking longer to sell, and again, that's due to the affordability that we're dealing with, as far as buyers and mortgage rates. Original list price, down 3.8%, okay? So things still may be priced a little too high, but this is really critical right here, a month's worth of inventory. Remember, 6 months of inventory is a balanced market, 7 months of inventory is a buyer's market, 4 months of inventory is a seller's market. We're at 3 months worth of inventory. Yes, that's up 287%, but still nowhere near where we need it to be. And this is the real story of why we continue to see price integrity holding strong. There's just limited amounts of inventory, supply and demand. It's able to overrule these high interest rates, okay? Keep in mind, everything above this line are our lagging indicators telling us where the market's been. Everything below the line are our leading indicators telling us where the market is going. Our active listings are up. That's good news. Our new listings are down though. So that's, we're still got a little bit of a mixed bag. Pending listings are up, but our sold listings are down by almost 4%, okay? And I still think this is directly related to our low inventory levels. Keep in mind, when we see things here in Sarasota that are priced well and they're in an attractive location, they're still being sold incredibly quickly within a week or so. Okay. And we're still seeing deals that are happening off market. So anyway, if you have questions about any of those numbers, what does it mean to you? What's happening in your neighborhood? What is your home worth? Is this a good time to buy and sell? I'm more than happy to answer any questions that you have. Just reach out. And that's it. Thanks so much for tuning in. And remember, who you choose to negotiate for you absolutely matters.